Hi, Denver homeowners and your future homeowners. You know, tax season is almost upon us, and just hearing those words can send shivers down your spine. But what if I told you that owning a home could be your ticket to significant tax savings? You know, from mortgage interest to energy upgrades, today we're going to be discussing how your home is more than just a place to live. It's a goldmine of tax write-offs. Let me show you how to maximize your tax savings so you don't leave any money on the table like I used to when I was a renter. But before we get started, let's get an understanding of some of the terms we're going to be using, like the difference between a tax write-off and tax credits, and how they help you save money on your taxes. For example, tax write-offs reduce the amount of income that is subject to tax. So let's say you earned $95,000 last year and you qualify for a $10,000 tax write-off. Taxable income then would be reduced to $85,000. It means you would only pay taxes on the $85,000 instead of the full $95,000. The actual amount you save depends upon your tax bracket, and a good tax professional will help you understand which tax bracket you're in. Now, tax credits, on the other hand, directly reduce the tax that you owe dollar for dollar. So let's say you got a bill for $3,000 in taxes, but you qualified for a $1,000 tax credit, then your bill would be reduced to $2,000. And some tax credits are even refundable, meaning that if the credit is more than the tax you owe, you could receive a difference in a refund. Gee, the government paying you, wouldn't that be nice? Then there's an understanding of the difference between the standard deduction and the itemized deductions. Standard deductions is a fixed dollar amount that reduces your income on which you're taxed. So this amount is going to vary based upon your filing status, as well as it's adjusted annually for inflation. Whereas itemized deductions or write-offs allow you to list specific expenses that the IRS deems acceptable, and these include a lot of those expenses associated with home ownership. Let's discuss those. Write-off number one is your mortgage interest deduction. So think about this. Did you know that the interest you pay on your mortgage each year can be deducted from your taxable income? Boy, I loved this when I became a homeowner for the first time. This applies to loans up to $750,000 for single filers and for married couples filing jointly. For example, if you paid $10,000 in mortgage interest last year, that amount could reduce your taxable income, potentially lowering your tax bill along with any tax-related stress significantly. And the bank that holds your mortgage, they're going to send you a statement called your mortgage interest statement on Form 1098. And personally, I love to get that form with all those zeros behind it because I'll be able to write off that on my taxes, especially after not getting it all the years I spent renting. Now, write-off number two is property tax deduction. One of the nice things about being a homeowner is that you can still deduct your state and local property taxes from the federal taxable income. However, due to the Tax Cuts and Jobs Act of 2017, there's a cap of about $10,000 on the combined amount of state and local taxes, including property taxes, that you can deduct. But this deduction can alleviate some of the financial burdens associated with property ownership, especially when you're seeing your home values go up and your property taxes go up right alongside that. Now, write-off number three is energy-efficient home improvement credits. Now, we all like making our home our very own, and investing in energy-efficient upgrades can not only lower your utility bills, but also provide tax benefits. Homeowners can still claim credits for installing energy-efficient windows, sliding glass doors, HVAC systems. These credits directly reduce the amount of taxes owed and make eco-friendly renovations appealing, as well as increasing your home's value and your enjoyment while you're living there. Now, write-off number four is home equity loan interest deduction. That's called your HELOC. Now, when you've made all those energy-efficient home improvements, if you took out a home equity loan or line of credit, there's great news. The interest on these loans is deductible, but only if you use the funds for substantial home improvements. So I think that's a nice incentive to redo a kitchen or bathroom or add that mother-in-law suite if that's something you've been wanting to do. And write-off number five is your senior property tax exemption. Now, the senior property tax exemption is one of my favorites because a lot of my clients are taking advantage of this. Here in Colorado, seniors age 65 and older who've owned and occupied their primary residence for at least 10 consecutive years may qualify for the property tax exemption. Now, before you get too excited, you have to realize it's not an exemption from paying any property taxes. But what they do is they take 50% of the first $200,000 in actual value of the primary residence to be exempted from the property tax. And in the market we're in today, that's providing substantial savings. Now, write-off number six is capital gains tax exclusion on home sales. Boy, this is one that always worries a lot of people because I get a lot of questions about this all the time from my clients. And what we're looking at here is the capital gains tax exclusion on home sales. The way this works is when you're selling your primary residence and you're single, you can exclude up to $250,000 of capital gains from your income. Or if you're married filing jointly, you get $500,000 that you can exclude. This exclusion can result in significant tax savings, especially when you're transitioning to a new home. Hi, my name is Peggy Durstoff, a realtor at Live Denver Suburbs, powered by HomeSmart, and I understand the importance of maximizing your financial benefits as a homeowner. Now, there's a lot more tax write-offs that can lead to substantial savings this time of year. So for a deeper dive into these deductions and more homeowner tips, check out our comprehensive blog post linked below. And remember to consult a tax professional to ensure that you're making the best choice for your situation. And keep good records year-round. Both will make tax time less stressful and easier. And don't hesitate to reach out with any questions if you need a referral to a tax professional. In the meantime, thank you for watching, and I'll see you on the next video.